Hello traders, welcome to your technical market update for Tuesday the 3rd of March 2015. Well, we've just had the Australian RBA leave their rates on hold. The Australian dollar bounced as a result, you can see here on the daily chart. However, they did mention that they will be looking to potentially cut rates in the future, and all their other comments they did note and at least admit that the economic situation in all other fields besides housing is not in the best shape or not in as good a shape as they would like. So pretty much the market will look to the next month's rate decision and see whether they cut rates, and they potentially will start pricing that in from tomorrow's GDP figures. If Australia's GDP figures come in low, I'm talking 0.5 or below, well then that will signal that the growth of the Australian economy is really below what they expect and what they need, and therefore a rate cut will be required at some point in the future to try and correct that. Even though the RBA seems to be really worried about the housing bubble, they seem to not put as much emphasis on all these other metrics like growth and whatnot, and if they keep ignoring the other metrics in the economy, we will be putting ourselves in a worse position moving forward. So having said all that, I do believe it will consolidate in this region here and then look to tomorrow's GDP for our next move. If it does outperform and surprise everybody, we will get a break of this resistance level to the upside. This will form a bottom, this downtrend will be broken, and we'll have a new higher swing high, meaning that potentially we have a trend forming here in the growth of the Australian dollar. I'm not holding my breath that that turns out, but we'll keep an eye on that tomorrow. If we have a look here, we've also got this wedge or this triangle breakout that happened, and it was forming really tight just before the news, and we've now got a breakout to the upside for the Australian versus the Jap. Now that could consolidate and not breach the major resistance level at 94, but if GDP figures do come out better than expected, we could get a breakout through there and there's a trade potential for sure. If the figures come in weak, well then this consolidation area could remain and we could just pull back into this area here and look for new direction. Australian dollar versus, or the pound versus the Australian dollar, as you can see with the interest rate, the Australian dollar got a bit of a boost. All other currencies pretty much were on hold and not doing a lot, and we've just pulled back into the lower range of this consolidation that we've had here for the pound. So I expect that this is the 4-hourly chart, and we could possibly see that support will be given here at $1.96 once again, as there's no reason for the Australian dollar to be overly positive with the news that came out today in the RBA's comments. All right, let's get on to some other charts. The New Zealand, we have the dairy auctions coming out tonight, and we've had a fair few positive ones in a row. And generally that will suggest, considering that they've all been around the 10% increase, that we could potentially have here a situation for a negative result. So we'll keep an eye on that. If we do, if I get a 4-hourly chart, and I do zoom in for you because it's probably unclear, we have this bounce here from the Australian RBA putting their rates on hold, but we could see it pull back, and depending on how bad the result is, we could get a break of the 75-cent range, and that would potentially lead to lower moves. However, if the result comes in positive, I'll be not surprised at all if we push higher up into this region once again. So the trade for me would be a shock, poor result, and potentially a trade to the downside. So if that comes in, it's something that I'll definitely be looking at. The Great British Pound. Now, if I go to the daily chart, I zoom in for you because it's probably not clear. I've been mentioning about this wedge. We did get a breakout of it, and we've been drifting to the downside. It's a bit clearer on the 4-hourly chart. We had the breakout. We've come and tested the back of it, and it's just been weak ever since. But not weak due to weak UK data. It's been weak due to the US dollar strength becoming back into favour. And basically over the last few sessions, if I bring over the US dollar here, you'll notice that on Friday we had a big US dollar rally, and then the session, Thursday, and then the session on Friday was quiet. We had a gap higher. We've closed that gap and it found support, and then last night's US session we begin momentum once again. Tonight that US dollar strength could continue, however we don't have a lot of economic data coming out to drive that. So purely on a technical basis, $1.54 could act as resistance, and we could see it a potential short-term trade to the south side. I've mentioned before that I'm not a bear in the pound at all. So I'm not taking any long-term position short on the pound and on a fundamental basis, because if I believe that the pound could potentially raise rates at some stage this year and their economy is way outperforming majority of the others, there's no reason for me to be holding a long-term bearish bias. But I will take some scalps to the south side, and I will make some money there if there's a shorting opportunity. So keep an eye on the US dollar, as the US dollar in these technicals, this resistance level here, which was support, it's broken through it, testing the back of it, could become resistance again, might offer you a short-term shorting opportunity down to this historical next. If I go to a 4-hourly chart so you can see it better, over here, you'll have a support level. That was a support, that was a resistance. So that, once again, could come into play and offer support. So I'm not banking on it going too much below that, but we'll have to wait and see what fundamentals roll out later in the week when we have the Bank of England's data coming out. If I go to the euro, it's been quite interesting. I did put out a chart on Twitter. We did have this double top where we had this big fall. If I go to the daily chart, I better zoom in for you. We had this massive consolidation that was painful. We had a breakout to the downside, and then we've had a retracement, and it's tested the back of it, and twice now, which is basically acting as resistance, and now the market is testing a $1.12 again. Now, if the US dollar strength becomes back into fashion again tonight, well then we could find that this will be resistance, and we could do some scalping to the downside. There isn't any data coming out for the euro, so not of great importance besides the German retail sales. So if German retail sales in not too distant future, half an hour or so, comes out weak, well then this could offer a short-term trade to the downside, and we'll make a couple of pips in here, 20 or so. So keep an eye on that, but I'm definitely not looking to be a long-term bear in the euro right now, and you may find that strange, but the euro data that's been coming out of late is actually starting to show signs of stability, which is quite interesting, and that will be reflected on later in the week when the ECB starts reporting their data and more importantly their interest rate decision, which obviously will remain on hold, but it's more their policy statement and press conference after that will hopefully give some clues to the market of what's going forward. Now, if they're quite hawkish, we could actually see the euro bounce, take out these levels, and we could have seen a double bottom here forming in the euro. So it's just something that keep in mind. It's funny how things change in such a short period of time where everybody's doom and gloom on the euro, but the data hasn't quite been, I guess you could say, as bad as the price action has been. Therefore, there's possibly not a lot of more downside unless the economic data gets worse, if you understand what I'm saying. All right, so we'll have a look at the US CAD. If I go to the daily chart, we're still in this consolidation range. So the US dollar strength has obviously created a bounce here, but on the other side of the coin, if I just duck over to oil for you, if I duck over to oil, it's in a consolidation itself, and it's just got the support level. If we get a bounce off here, that could help the CAD, and we could see a move to the downside. However, if this support's broken and oil was to fall, well then basically the consolidation that we've been looking at could just be a short-term panic, and we could see a breakout to the upside with US dollar strength and weak oil prices pushing the CAD lower. We do have some data coming out for the CAD tomorrow. We've got the interest rate decision and the statement. They've basically already indicated it's going to be on hold, so I don't expect any major shock to the market when it comes out on hold, because they have already warned us of that. But we do have tonight some GDP. There is a chance it comes in weak. Now, if the GDP does come in weak and and tonight the US dollar strength story becomes back into favour, as I was mentioning earlier, well then we could make a run up to here and possibly commence the breakout of this panic. But I'm not. I think it may. If that does happen, it will just come untested. I don't think it's enough strength in that particular outcome to cause a breakout. If we have a look at the US JAP, like I mentioned, the the strength in the US dollar jab has come in due to, since Thursday, we had the US dollar rally come back into play. And it's been quite funny because the data coming out of the US hasn't been really good. Like personal income, personal spending, ISM manufacturing last night, construction spending, have all been to the downside. It's only the rise in US yields that can really explain the US dollar strength. Having said that, Americans are saving at the fastest pace since 2012, so they're putting more cash away. So that's something, but it's definitely not enough to initiate a massive US dollar bull run because we haven't got any data to suggest that yet. But later in the week, everything could fall in its place, as we do have some data kicking in tomorrow, where the US will really start to see a big flow of data from PMI to construction. What else have we got? We've got some Fed board member speeches. We've got some ADP employment change, and of course, we definitely have some continuing jobless claims, initial jobless claims, non-farm payroll productivity, and on Friday we've got the big one, the non-farm payroll. So I don't expect a lot to happen tonight with the US dollar, anything massive anyway. It'll be all coming down to the later part of this week when we get some US data coming out that'll determine the direction for the US dollar index and then how all other pairs trade against it. So we were long on it. I did have a trade. I did put out on Twitter. We took profit up here. I was kicking myself because as soon as the US session kicked in, we did have a bit of a rally in the US dollar, and it's only just come off in the Asian session. But you can't pick the highs, and I'm still happy with the decision. And if we move down into here and we start to get some positive US data later in the week, I will put out a buy to get back in. So keep your eyes peeled for that. Well, that's a bit of a summary of what we've got coming up. Like I said, there's not a lot of economic data. Keep an eye on the technicals, and we'll see if we can scalp and make a few pips. If I do put a trade on tonight, I will be sharing it with you on Twitter. So keep an eye on that. But until tomorrow, trade well.